Okay, an interesting story, I think, for those of us who watch and take an interest in the crypto markets. A data firm called Amberdata has been looking at a token called WLFI, and they think it might act a bit like an early warning light for the wider crypto market. Now, quick context, WLFI is the token tied to World Liberty Financial, a DeFi venture associated with the Trump family, set up by the Trump family, I think. That doesn't automatically make it important, but it does mean people watch it more closely than they would a random microcap, because the politics angle pulls in a lot of extra scrutiny, obviously. And the specific claim in this story here is that WLFI moved first on 10th of October 2025, before the big sort of market crash that happened with Bitcoin and all the altcoins, to be honest. Now, this isn't because WLFI is special on its own, but the way it moves and the way the money moves around it sometimes shows up before bigger market wobbles. So, anyway, it's like a pattern people have noticed, and it might be worth watching this. I'll keep the slides a bit financy, but I'll try and translate as we go along. Okay, so before this, WLFI was mostly treated like, well, just another chart doing its own thing, really. I don't know if you've ever watched it or tried to trade on it, but it's quite volatile. But in this case, Amberdata are basically saying, hang on, we've seen this token drop first, and then later the rest of the market follows. Now, I need to stress this. That doesn't mean that WLFI causes anything. It just means it might be a clue that something else is going on behind the scenes, like traders de-risking, liquidity drying up, or people moving money around early. And of course, it could work in both ways, really. So, there hasn't been any sort of massive market panic because of this report, nothing happening particularly with the token, but ideas like this can spread quite quickly in crypto, and once people start believing a certain thing is a warning signal, they start watching it, and sometimes they actually start trading based on it too. So it can all get a bit circular, if you know what I mean. People kind of watch the signal, they react to it. The reaction comes the story, really. So the reaction isn't always the data itself. It's maybe the crowd responding to the data. It is worth just keeping an eye out on, I think. I mean, it's why you couldn't do this quite as easily with the equity market, because crypto is a bit different from traditional markets. The main difference is in crypto, you can actually see a lot of activity happening on-chain. Wallets moving big money, big transfers, changes in behaviour, stuff like that. It's all there on-chain data. So the hard part is kind of working out what all this means. A big move might mean someone is cashing out, someone is shifting risk, someone's preparing for volatility, or it might mean absolutely nothing at all, which it's always possible. So the point here isn't that this token is the market's crystal ball, but it could be an indicator to keep an eye on. People are increasingly using on-chain data like this as a kind of risk thermometer. So it's good to be aware of tokens that could act in this way. So there is a slightly boring, but it's still important angle here. Firms like Amberdata don't just sell data to traders. They also sell it to compliance teams, risk teams, and sometimes organisations that support the regulators. So if certain patterns start being treated as risk signals, you can imagine how this might feed into exchange monitoring, risk scoring, and even future regulation or enforcement priorities. In the UK, that certainly matters because the FCA is already very focused on consumer protection and market integrity. So anything that looks like early stress signals tends to get some attention. So, here's the honest bit. We don't know if this pattern holds long term. It was very strong on October the 10th of last year. But it might indeed be real, or this might be cherry picked by one of these firms. It's always possible to grab a little story like this. Crypto is brilliant at finding these patterns, and they vanish usually. They usually vanish as soon as I start trading on them. So anyway, once everyone knows a signal, it really stops being a signal, or worse, it could even become some sort of trigger or self-fulfilling prophecy, something like that. Anyway, so the danger is people overact, and the warning sign helps create the volatility it was meant to predict. So, what to watch? If you want to follow this story, the thing to watch is not the headlines, it's whether this pattern keeps happening or happens again. Does the WLFI token drop first again if we see a market crash? Go back and look. If you see a little crash, see if it moves beforehand. Do we see bigger market moves after? Do traders start referencing it more publicly as well? Do you see any more mentions of it? And do any bigger firms or exchanges start talking about this as an actual real risk indicator? This isn't investment advice at all. It's just trying to understand what might be going on underneath the hype. So if you want more crypto stories and deciphering, please stay tuned for my next channel. New channel, very new, so I'd appreciate any likes and subscribers that could come my way. Anyway, thanks for watching, and I'll see you in the next one. Bye for now.